it's James for the Property Education Company, and I'm thrilled to be introducing Rochelle Hamilton from Brown Hamilton. Thank you so much for joining me today, Rochelle. Rochelle is an accountant with Brown Hamilton with your sister Nicole. You've both got over 10 years of experience working in major accounting industries, and then you've actually taken over your father's business and started building that up and becoming Brown Hamilton now. So today, there's much we're going to talk about. The market's changing. There is a lot going on when it comes to the economy, and we're seeing a lot of the effects that accountants are going to be having on our clients across the board. But I'll let you know, everyone, that today is largely educational. It is general advice. If you would like special advice, feel free to reach out either to Rochelle or myself. However, today is largely an educational piece. Rochelle, again, thank you so much for joining me. Where do we find with the uncertainty of this week? We've got the budget coming up on the 12th. We've just had an interest rate rise. What are we seeing at the moment?
Yeah, the anticipation that we're facing and the uncertainty in just all areas of life, right, James? Probably our politics is the most stable thing, with the Albanese government at the moment having such a strong majority. There's not going to be a lot changing there. So that's pretty certain. But with global uncertainty, with the oil prices, with this budget about to come up, we're going to see some of the most significant changes we've seen in a lot of years. Really, in recent years, we've got to budget the day after budget and ready to make sort of technical announcements to our clients, and it's crickets. There's not much to say. It's a little bit of tinkering on the edges, and that tinkering on the edges has been happening for a lot of years, even though a lot of people within the industry, particularly within the Tax Institute, have been calling for significant structural changes to our taxation system because it's well overdue. And now that the government does have a mandate because of their majority, they've got the opportunity to make some changes without a big political downside for them.
Yeah, and we're seeing that a lot of people are worried about what those changes are going to be, or they're excited for them as well. So there's a large spectrum of people anticipating what is going to be happening on the 12th. Everywhere from our PAYG clients to our self-employed for small and medium businesses. Is there anything in particular that you think we should be looking out for the 12th at this point?
Yeah, so look, again, we're all just rumours at the moment, and your press releases gradually being made by the Treasury Office. For PAYG earners, I suspect there'll be a little bit of tax rate reduction, maybe. We've already seen one first level of that in the last couple of years, but I think there may be an income tax change there. But it's around the property piece that is a lot of nervousness, with some people saying broken promises by the Albanese government, but potentially changes that have been in the wind for a long time, even since that got knocked down when Shorten tried to introduce these. I think it was back in 2019-ish, but now they've got a mandate and they'll be looking at making some rollback adjustments to the negative gearing and potentially to CGT discount. So what does that mean, particularly for investors where they have been able to take tax deductions for interest? There may be some changes around that which could really impact the tax that they're going to have to pay in relation to the income on that rental properties. Do I know the details yet? No, don't ask me. We've got a week to wait. This time next week, we'll know what the changes will be. The other thing is CGT discount. The reduction of that, which is for individuals, is currently at 50% discount if you've held a property for more than a year, which is a significant tax saving in the hands of property investors. So it looks like that's going to be wound back as well. To what degree, I don't know. They may just reduce the discount by half, or they're talking about maybe going to an indexed model. We'll wait and see. But there's some big changes in the winds for property investors.
And when it comes to property investors, no matter what they're doing as their own primary source of income, are you finding that a lot of them are wondering, oh, is now the time to sell, because they're worried that they're not going to be able to hold their properties due to these tax changes that will be occurring for their investments?
Yeah, look, you've got people that the punters out there will be trying to anticipate it and get ahead of the game. I generally tend to go, don't knee-jerk react. Let's wait and see what happens, and then we can make a plan. It's all about planning, because you don't do these things in isolation. We always need to look at the big picture. And I find that once we know what the legislation is going to be, when it's going to apply, we can then put a plan and a strategy in place to put our clients in the best position possible. So yes, there's a knee-jerk reaction, but we've got a pretty flat property market, certainly in Melbourne at the moment, and we've had investors selling down because of land tax costs as well. So there's a lot of pressure on property investors at the moment, but it is with a policy direction to open up housing for first home buyers and people who otherwise can't afford to get into the market. We're starting to move towards, it was a mandate. It's a mandate of the government to open up housing for first home buyers.
We're expecting this mandate from the government to open up housing for first home buyers. Let's talk about when it comes to purchase price. Some people believe prices could be affected, but there are many factors involved. What factors should investors consider?
Well, I suppose making money on an investment depends on how long they've held the property. For a lot of investors, they've already made money in what has otherwise been a booming market. And so it's really forcing people to move out of the property space and perhaps invest. It doesn't mean that they can't invest in other spaces, right? There's still the market. Go invest in the share market. There's options there, but yeah, so will it drive down the prices? That's the government's hope. That really is the government's hope. I'm not an economist, so I can't tell you about all the different factors that play in there, but that is the hope, is that it will drive down. That combined with what we want as an increase of housing supply, which we know the numbers are still not happening there. The supply isn't increasing enough to keep the access to those lower price properties for first home buyers.
Exactly. And what we're also seeing some concern on is potentially the rental market is going to dry up and rental properties aren't going to be available for people who need to rent. A little concern we've seen in that. So these are all the things that we've had our clients looking to consider recently. Now, from an accounting and tax purpose, what are the things that people should be getting their ducks in order right now, just to prepare for what the 12th is possibly going to happen, or post the 12th, what we're expected to see? What questions might be worth discussing with their accountant?
Yeah, well, look, this time of year, we're always getting into tax planning. We like to tax plan for our clients early. So you'd probably just be holding onto your hat, seeing what happens next week on the budget. And then it's time for conversations, not only around how the budget changes are going to impact you, but also what you can do post 30 June to maximise your tax position for the 2026 financial year. Remembering that you've got to make decisions this side of 30 June to give you a good outcome when you lodge your return the other side of 30 June. You can't backdate a lot of those things. You actually have to take action now and get those things in the best situation. So there's always options available. So it's worth having a conversation.
Yeah. What I also want to touch on, and this is a thought I've just had, is a lot of the accountants I work with, we talk about trust and especially in the investment space and holding properties in a trust. Can we touch on that briefly? Because I know that can be very important as a strategy for a lot of investors.
Yeah, well, I read in the paper today, I think the budget announcements could be tinkering with trusts as well. So we're going to have to see what that does as far as that as a strategy. But there's always upsides and downsides as with everything, and it's got to be suitable for your situation. Holding property in trust has adverse consequences for land tax in Victoria, so you've got to take care of that because you can potentially get hit with a land tax surcharge, so you'd be holding more. But it does give you options when you distribute a rental income and also when you actually realise the property and you have a capital gain to spread that around different beneficiaries of the trust. But again, there's a whole lot of limitations on that. And the heyday of the trust certainly in the 90s and early 2000s has really kind of been constricted as we've seen more and more legislation come into play on what you can and can't do. In the right circumstances, it's suitable. I found it's really useful in the estate and asset protection space. But if you're looking at it just for a tax minimisation strategy, you need to take care and make sure you get the right advice.
And this is very important because a lot of people are saying that, oh, I've got a trust for each single one of my different investment properties, and that might not always be the best strategy for that client. So thank you so much for highlighting that. What I want to talk about next is when it comes to buying an investment property right now. So people are still hungry to grow their investment portfolio. They've had clients who've gone and done very well in shares, and now they want to start something tangible to call their own. What steps may people prepare depending on their circumstances?
The first thing is knowing your numbers. I think you and I have spoken about that just last week. It's really knowing your numbers, knowing if you're going to sell down shares. Firstly, what's your capital growth on those? Because you're going to have some tax to pay before you can exit out of that. So it's really sitting down, and because not like for like, you can't just transfer 500,000 shares and put it towards $500,000 of property plus some debt. You're going to have some tax to pay in the midst of that. So timing is really important. Can you exit out of your share portfolio in a tax effective way to make sure you maximize your cash position so that you've got more to put towards the property that you want to buy? And also structure is important too. So coming back to what's the right structure in not just personally, but in my family context. Am I looking for generational transfer of property? Am I prepared to wear the extra land tax costs for the benefit of a trust? The issues around, some people like to hold property in companies, and if you do that, there's other issues around capital gains tax that you just need to be aware of too. So it's about having the conversations up front with your accountant, not doing it once you've got everything signed and locked and loaded. Do it beforehand, run the numbers, make sure it all makes sense. What's your income stream apart from your investments? How secure is that? Do I have my insurances in place? If I did get sick, do I have my insurances in place that will be able to service the debt if something happens to me? So we like to ask the whole picture, because if I'm just advising in a silo and going, yeah, trust is awesome because you can get some good tax spread on that, I'm not really looking at the big picture. And too often I get the phone calls. My mate at the pub said, oh, they've got a family trust and I should do this. It's like, well, I'm not your mate at the pub's advisor, and I don't know their personal circumstances, but I can tell you for your situation, it's actually not worth it. You're not going to get any bang for buck by doing that, and it's actually going to cause you more dramas. So it's all good that Bob at the pub and it works for him, and whoever his advisor is, that's great. But I like to give a really holistic picture, and you have to look at the whole situation to work out what's suitable.
Exactly. When it comes to your finances, it is a broad spectrum approach that we need to take. We can't just highlight, I can't just go, oh, you're going to buy this property, we can maximize your debt. And it's the last thing that most people need. We need that wiggle room to achieve, especially in a higher rate environment. Some borrowers may be feeling the pressure. I just want to touch on, I was just thinking as you were discussing a few bits and pieces, small to medium business owners are under a lot of stress right now. What I'm seeing is a growing rate of, sadly, separations in those small business owners in that space. And I want to know, how can a small business owner who's built from the ground up their business and they're growing, they're expanding, what's the things they could take into place to protect themselves as well as their partner for the fallout of a separation?
Oh, gee, I've seen too many of these, James. And yeah, it's sad. And we do our best as advisors to work with both parties to the extent that we can without conflict of interest. And I see it as an advisor, but I also do a lot of work in the family law space in helping pull together a family asset pool. I can't advise on exactly what family law says, but to a large degree, a business that's owned by one or the other party is likely to form the assets of the family, and will be drawn into a property settlement under family law purposes. So it can be challenging, because often if it's really one of the spouse's businesses and you've got a home, often it's almost one or the other. One gets the home, one gets the business. And that's never a perfect split, but it can be really hard when that business is a person's livelihood. They can't walk away from that, but they might be left without a home in the midst of it. So that might require even a conversation as part of the property's division is, well, how can I fund a house purchase now against the equity in my business, all those sorts of things. So yeah, it's a really tricky space as far as protecting it. Sometimes I say that's a little counterproductive if you're not separated yet, but you're already anticipating, if this goes south, what do I do? It's not necessarily saying you're wholly invested in your business. I don't know about prenups and all of that sort of stuff. Again, that's a family law space. But what I do is offer protection strategies for the generation above. So, for example, people that want to gift to their children, but they want to protect that gift asset from family law attacks at their children's generational level. So maybe they've been with a partner for a couple of years, or maybe the marriage, they get a sense that the marriage is unstable and that sort of thing, yet they want a gift to their child, but they don't want to lose that asset in the midst of a family law matter. So there's strategies in that scenario that can be really effective to ensure that those generational assets aren't lost in the midst of a family law division.
And that's so important. It's really about protecting the ones you love and actually giving them the benefit of everything you've worked for. People are generally very giving, and we give to those closest to us above all. So it's really important to have those strategies in place and to have advice like yours to be very specific in that nature. So I just want to finish up. What's the golden piece of advice that you could give for a client? Or what's the one thing you could, like a general piece of advice you can give to someone right now over the next 2 weeks, preparing themselves from interest rate hikes to the 12th?
The golden piece of advice. Look, I just did a piece this week for my clients, and it's actually about perspective and keeping perspective on everything, because there's going to be a lot of noise and there's going to be a lot of headlines in the next week as we anticipate, and a lot of fear about what this is going to do to you, what this is going to do to your bottom line, what this is going to do to the market, who's the bad guy, who's the good guy, all that sort of stuff. It can drag everyone down. And actually, everyone feels like they're a bit of a victim because something's going to be taken away from them. I think perspective is going, do you know what? Most of us are in a position we have options and we have agency to choose. So when you have options and agency to choose, you can make decisions that are as effective as you can in the situation you find yourself. There are only so many things that we can control. And so I think perspective is really important. That's why I go out hiking on the weekend, to get high above all the noise and to actually go, you know what? I have agency, I have choice. I cannot control what the government does next week, but I can actually be a good advisor. I can help encourage my clients to keep going, to help them control the things that they can control. And rather than jump on the bandwagon of the whingers and the moaners, I'd much prefer to go, you know what? We can always turn a situation into the positive. And I don't mean in a Pollyanna kind of way, but this is what we're faced with, but we have agency and we have choice. So let's use it.
Thank you so much for sharing that, because that's the biggest thing I think we all need to embrace, is being perspective of actually our current situation and the shifts and dynamics we can change. We did it a lot through COVID, as we all know, a lot of change in what we were doing. I know a lot of my clients, as well as ourselves, we had to shift the way we were thinking about things, and we can survive and move on, no matter the changes that we'll face going
That's right.
Yeah. So Rochelle, thank you so much for joining me today. Really appreciate your time. If anyone would like to talk to Rochelle, I'll make sure her details are attached. Otherwise, again, thank you one last time, Rochelle, and we'll talk to you soon.
Thanks, James.